Hi friends, how are you? By blessings to God, you are doing well. So this is Dr. A B JENA, faculty member, PG Department of Business Management, Fakinwal University, Besavia, Balasore, Odisha. Once again, I am welcoming to all of you to Dr. A B JENA classes. And dear friends, today we are going to discuss the 30 multiple choice questions. I mean 30 MCQs. And these 30 MCQs are very useful and fruitful so far as the 12 standard students as well as the PG and UG students so far as the commerce management, PMR and other allied subjects like the professional subjects. And these 30 MCQs are from the cost accounting. So thanks a lot to my dear friends. So you have demanded, kindly you just make some MCQs from the cost account. Dear friends, without delay we will start our discussion. So during the discussion, if any mismatch or gap you find, kindly you comment in the comment sections, and your valuable comments and suggestions are most welcome for the next video. Without delay we will start one by one MCQ. So during the discussion, so I will have the request, kindly you guess it what would be the right answer, I mean the right option for the respective MCQ. Friends, so first one MCQ is dash is known as the father of cost account. So far as we are discussing the cost accounting, so we have to know who is the father of the cost accounting. So there are four options. Option A, Frederick W. Taylor. Option B, Philip Kotler. Option C, Eugene Fama. And the last one option D, the Jerome Lee Nicholson. Friends, so D is the right option for this MCQ. Jerome Lee or J.L. Nicholson is regarded as or known as the father of cost accounting. And the second one MCQ, the basic objective of cost accounting is what? Option A, profit analysis. Option B, it's a cost ascertainment. Option C, financial audit. Option D, it's a the tax compliance. Friends, so B is the right option for this MCQ. The basic or the main objective of cost accounting is to ascertain the cost. So next one MCQ, the direct cost incurred can be identified with option A, each unit of output. Option B, each department. Option C, each month. Last option, each executive. Friends, so A is the right option for this MCQ. So direct cost incurred can be identified with each unit of output. So next one MCQ, overhead cost are the total of dash. Again I am repeating the question, overhead cost are the total of what? Option A, all specific cost. Option B, all direct cost. Option C, it's all indirect cost. Option D, it's both a direct and indirect cost. So C is the right option for this MCQ. So over cost are the total of all indirect cost. So next one MCQ. The prime cost. The prime cost includes what? Option A, direct material, direct wages and direct expenses. Option B, direct materials, direct wages and indirect expenses. Option C, it's the direct material, indirect wages and indirect expenses. And option D, it's a indirect material, indirect wages, indirect expenses. So prime cost includes option A. Prime cost includes the direct materials, direct wages and direct expenses. So next one MCQ, it's also vital. Cost of sales plus profit. Cost of sales plus profit is equal to what? Whether option A, the value of stocks. Option B, it's the value of goods produced. Option C, it's the value of finished goods. And the last one option, it's the selling price. So cost of sales plus profit is the selling price. So D is the right option for this MCQ. So next one MCQ, current ratio. Current ratio is what types of ratio? Option A, it's a profitability ratio. Second option B, turnover ratio, option C it's a short term solvency ratio, and last option it's D long term solvency ratio. Friends, so C is the right option for this MCQ. So current ratio is a short term solvency ratio. So next one MCQ, turnover ratio is also known as or called as what? Option A profitability ratio, option B it's a activity ratio, option C it's the liquidity ratio, and last one option it's the solvency ratio. Friends, so B is the right option for this MCQ. So turnover ratio is also known as or called as activity ratio. So next one MCQ, the creditors turnover ratio is also known as what? Again I am repeating the question. Creditors turnover ratio is also known as whether option A working capital turnover ratio, option B it's accounts payable ratio, option C it's the debtor turnover ratio, and option D it's the stock turnover ratio. So friends, B is the right option for this MCQ. So creditors turnover ratio is also known as accounts payable ratio. So next one MCQ, the debtor turnover ratio is also known as what? Debtor turnover ratio is also known as what? Option A it's a creditors velocity ratio, option B debtors velocity ratio, option C it's the stock turnover ratio, and the last one option it's the working capital turnover ratio. So debtor turnover ratio is also known as what? Option B it's the debtors velocity ratio. So B is the right option for this MCQ. So next one MCQ, preliminary expenses are the example of what? Whether option A current assets, option B it's current liabilities, option C it's the fixed assets, and the last one option is the fictitious assets. So preliminary expenses are the example of fictitious assets. So D is the right option for this MCQ. Friends, so it's a very vital MCQ. You may get in the exemptions. So next one MCQ, prepaid expenses are the example of what? Prepaid expenses are the example of what? Whether it's option A current assets, option B it's current liabilities, option C it's the fixed assets, and the option D fictitious assets. So friends, so prepaid expenses are the example of current assets. I have already told you that. So this discussion will be very useful and fruitful not only to the student categories but also those who are preparing for the lectureship examination like the OPSC, Odisha Public Service Commission, or SSB, or UGC NET and GRF. So that's why all 30 MCQs are very vital from the exemption point of view as well as the competitive exemption points of view. So next one MCQ, it's easy. Sales minus gross profit is what? Whether it's option A net profit, option B it's the cost of goods sold, option C it's the office and administrative expenses, and last one option it's the all the above. So sales minus gross profit, it is the difference between sales and gross profit, it's the cost of goods sold. So B is the right option for this MCQ. So next one, equation, opening stock plus purchases plus direct expenses minus closing stock is what? Again I am repeating the question of opening stock plus purchases plus direct expenses minus closing stock is what? Whether it's option A net profit, option B it's office and administrative expenses, option C cost of production, and last one option is cost of goods sold. Dear friends, so C is the right option for this MCQ. For opening stock plus purchase plus direct expenses minus closing stock, it is the cost of goods sold. So D is the right option for this MCQ. So next one MCQ, funds flow statement is based on whether option A cash concept of funds, option B it's the fixed assets concept of funds, option C it's the long term funds concept, and the last one option is the working capital concept of funds. So D is the right option for this MCQ. So funds flow statement is based on Option C, based on working capital concept of funds. So next one, MCQ, the liabilities which are paid in cash in a normal course of business within a year are called as what? Option A, whether the long term liabilities. Option B, it's the medium term liabilities. Option C, it's the short term liabilities. And the last one is it's the all of the above. Friends, so C is the right option for this MCQ. So liabilities which are paid in cash in the normal course of business within a year are called as or known as the short term liabilities. So next one, MCQ, the assets which are converted into cash in the normal course of business within a year are known as or called as what? Whether it's option A, it's the current assets. Option B, it's the fixed asset. Option C, it's the vesting assets. And the last one option, it's the fictitious assets. So friends, so A is the right option for this MCQ. So A, the assets which are converted, or I mean the current assets which are converted into cash in the normal course of business, I mean within 1 year. So next one, MCQ, contribution margin is also known as or called as what? Option A, net profit. Option B, it's a gross profit. Option C, it's the marginal income. And the last one option, it's a all of above. Friends, so contribution margin is also known as what? The margin income. So C is the right option for this MCQ. So next one, MCQ, the term contribution refers to what? Whether option A, excess of selling price over the variable cost per unit. Option B, it's the difference between the selling price and total cost. Option C, it's the subscription towards raising the capital. Option D, it's none of above. Friends, so A is the right option for this MCQ. The term contribution refers to the excess of selling price over variable cost per unit. So next one, MCQ, what establishes the relationship between the contribution and sales? Option A, whether it's the marginal costing. Option B, whether it's the absorption costing. Option C, it's the profit volume ratio. And the last one, it's the fixed cost ratio. So friends, C is the right option. C is the right option for this MCQ. So profit volume ratio establish the relationship between the contribution and sales. So next one, MCQ, it's the periodic cost. Period cost are the example of what? Whether option A, variable cost. Option B, it's the fixed cost. Option C, it's the prime cost. And option D, it's the none of above. So friends, the period cost also are the example of the fixed cost. So B is the right option for this MCQ. So next one, MCQ, total cost of product. Total cost of the product is calculated as what? Option A, whether variable cost minus fixed cost. Option B, it's the variable cost plus fixed cost. Option C, it's the fixed cost minus variable cost. And the last one option is revenue minus fixed cost. So B is the right option for this MCQ. So total cost of the product is calculated as the variable cost plus fixed cost. So B is the right option for this MCQ. So next one, MCQ, PV ratio. PV ratio, profit volume ratio, is an indicator of what? Option A, it's the rate of profit. Option B, it's the volume of profit. Option C, it's the value of sales. And the last one option is the rate at which goods are sold. So friends, so A is the right option for this MCQ. So PV ratio is an indicator of the rate of profit. So A is the right option for this MCQ. So next one, MCQ, it's also very vital. So JIT stands for what? Whether option A, just inventory time, job inventory time. Option C, it's just in time. And the last one is that is the job in time. So friends, GIT or JIT stands for just in time. So C is the right option for this MCQ. So next one, MCQ, EOQ. More or less we are acquainted with this stuff. So EOQ stands for what? Option A, whether economic output quality. Option B, it's economic order, uh, economic order quality. Option C, it's the essential order quantity, and the last one is that is the economic order quantity. So D is the right option for this MCQ. So EOQ stands for, E stands for economic, O stands for order, and Q stands for, that is the quantity. So EOQ stands for economic order quantity. So next one MCQ, that is the process costing is suitable for which types of farms or industry. Option A, it's the brick laying farms. Option B, it's the transport farms. Option C, it's the oil refining farms, and the last one is that is the medical or hospital services. Friends, so C will be or is the right option for this MCQ. So process costing is suitable for oil refining farms. So next one MCQ, let's say the batch costing is suitable in your industries like, or batch costing is suitable in to which types of industry. Option A, where identical products are produced. Option B, it's whether distinct products are produced. Option C, engaged in service industries, and last one option, it's the engaged in construction industry. So friends, so A is the right option for this MCQ. I mean the batch costing is suitable in industries like where the identical products are being produced. So next one MCQ. On standard costing or from standard costing. So standard costing is a technique which compares, or standard costing compares the what? Option A, whether fixed cost with the total cost. Option B, it's the variable cost with the total cost, and option C, actual cost with the other firm's cost, and the last one option, I mean the D, is the actual cost with the standard cost to find out the variation. So D is the right option for this MCQ. So standard costing is a technique which compares, I mean the standard costing compares the actual cost with the standard cost to find out the variation, I mean the gap. So standard costing is the very important technique to be adopted to control the cost. So that's why the standard costing is very vital to the business organization or firm. So next one MCQ, salary paid to permanent employees is an example of which cost, whether first one is implicit cost, or options B is that is the explicit cost. Option C, it's the variable cost, and the last one option, I mean the D, is the fixed cost. So D is the right option for this MCQ. So salary paid to the permanent employee is an example of a fixed cost. So last but not the least, the total of all direct cost is known as what? Again I am repeating, total of direct cost is known as what? Option A, it's the cost of production. Option B, it's the cost of sales. Option C, it's the work cost, and the last one is that is the prime cost. Friends, so D is the right answer for this MCQ. Total of direct cost is known as the prime cost. So dear friends, so these are all about today's discussion. I am hopeful that so you have learned a lot. So I will have the request to all of you, kindly you subscribe my channel, kindly you share it, kindly you forward it, and your valuable suggestion and comments are most welcome for the next video. Again, I am requesting to all of you with regard to the 30 MCQs, if mismatch or gap is there, kindly you give your valuable comment. So thanks a lot to all of you.